Hey, welcome back to the channel. Austin here, and in this video I'm going to be breaking down ETFs versus mutual funds. That's what we're going to be talking about, and I'm going to be talking about the pros and the cons of ETFs versus mutual funds, just looking at the differences, which one is better for different types of investors. So if that's something you care about, then that's what I'm going to be covering in this video. So stay tuned, we're about to jump into that. A little bit of housekeeping before we get started. I am not a professional stockbroker. This video is for entertainment purposes only. So consider working with a licensed professional if you're looking for investment advice. With that said, though, I strive to bring you a ton of value, and I really want to help you understand all things kind of stock market, investing, personal finance. In this video, we're going to be talking about ETFs versus mutual funds, which is better for you, and which should you maybe be looking at putting some of your money in. Maybe it's both. In fact, it probably is both. I have money in both mutual funds and ETFs. You probably sense a little bit of a theme there, right? Okay, so before we get started, though, real quickly, smash that like button if you would, please. It would help my channel out greatly, and consider subscribing because I'm here for you every single day, bringing you videos to help you take your money and manage your money and just help your money to do more for you today, tomorrow, and into the future. So with that said, let's jump into ETF versus mutual funds. If you see me looking down, that just means I've just got a couple of notes, and I want to make sure that I cover everything for you. Okay, so let's start off and really talk about something really very simple. Number one, you should never invest in something that you do not understand. I really want to stress that and get that out on the table up front. So if you don't know what an ETF is or a mutual fund is, I'm going to help you understand that, and then subsequently also help you understand maybe which is better for you, and maybe it's a blend. Maybe you put some money in ETFs and maybe you put some money in mutual funds, which frankly is the way that I go about that, okay? Because I like to have risk spread and diversified, and have my family's money in different little buckets because they do a little bit different thing. So number one, if you don't know what an ETF is, it stands for an exchange traded fund. Very simply, it is a fund usually built to track to an index. Now that's not always the case. There are different types, an index like the S&P 500, the NASDAQ 100, things like that, okay? But that's not always the case. There can be, and there are ETFs out there that are specifically like ETFs made up of international companies. There are ETFs out there that are made up of tech companies, only tech. There are ETFs that are out there that are made up of small cap, large cap. There are a ton of different ETFs, which is one of the reasons I really like ETFs. Another thing about ETFs is they traditionally have very low expense costs and management fees associated with them, okay? And then also ETFs are traded daily. They are basically traded just like a stock, okay? But an ETF is an exchange traded fund. There are companies in that fund, in those different, it could be, again, any type of different, there's a lot of different types of ETFs, okay? So subsequently, mutual funds are similar, right? But mutual funds are just funds made up of a bunch of different stocks. Again, similar in they could be international companies, they could be large cap companies, they could be small cap companies, there are mutual funds that are out there that are built to track to indexes. There are, right? You can get a mutual fund that's built to track to the S&P 500. That's an example, right? The difference between mutual funds, two big ones actually, is mutual funds are not traded daily. They don't trade on the stock exchange similar to an ETF, right? So ETF is traded daily. You can buy and sell that ETF all day long if you wanted to. I wouldn't recommend that. I'm a long-term investor. Should be putting your money away and putting money in investments and then investing for the long term. But a mutual fund is only traded once per day. So it's only bought or sold after the market closes. Okay, so that's it. But the mutual fund, the other main difference between a mutual fund and an ETF, guys, is that a mutual fund is usually actively managed, right? It's actively managed. And so again, the really cool thing about that is that fund is being managed by investment experts. And traditionally, most mutual funds are built to try to do better than the average market returns. Whereas a lot of ETFs out there that are built to track to an index are built to try to basically bring in returns that are similar to that, that index, like the S&P 500. Like if you wanted to go buy an ETF right now that would track to the S&P 500, you're basically looking at an ETF that's going to basically produce 10 to 12% returns year over year, because it's made up of companies and stocks that are part of the S&P 500. Thus, it's going to produce returns associated with that. Whereas in a mutual fund scenario, depending on what type of mutual fund, it's usually built to try to outperform the indexes, right? They're trying to get better than 13-15%. I mean, obviously there are thousands of different types of mutual funds out there, but those are the main differences. Okay, so to really try to bring this home, it depends on what type of an investor you are. Should you choose an ETF? Should you have mutual funds? If you are an active investor, meaning you want to buy and sell, you want to kind of be active, number one, I'd recommend you have individual stocks, okay? Because the individual stocks allow you to kind of buy and sell those individually. Now, there's risk associated with that. Or look at an ETF fund that might be made up of companies in a particular sector, semiconductor, tech stocks, pharmaceutical, things like that. And you can kind of play with that ETF a little bit and buy and sell that ETF if you're more of an active investor. Again, if that's the type of investor you want, or maybe that part of your portfolio you consider to be kind of active investments, and I'm actively doing that. I know people all day long that are kind of in and out of ETFs because they like the idea of ETFs, because the ETF is a fund made up of those particular type of companies that fit within whatever that fund is, small cap, large cap, tech fund, whatever, tech ETF, whatever it may be. But I do know active investors that buy and sell ETFs. That could be a strategy. Whereas if you're kind of on the other side of the spectrum and you're like, hey, I really consider myself more of a passive investor, meaning like I really want to kind of buy and I want to hold. And if you're looking at for more retirement scenario, I definitely recommend you have a large chunk of your money put into maybe mutual funds. Yes, your fees are usually a little bit higher, but mutual funds are actively managed by professional individuals, things like that. Professional companies like the Vanguards and the Fidelities of the world. These are big companies. That's what they do. They build these funds, and they're really built, obviously, right, for kind of retirement purposes and things like that. So that could be an example if you're looking at hey, I want to put a lot of money away for retirement. You could steer a large percentage of your money into mutual funds so that it's actively managed by somebody else, passively managed by you, meaning you're not actively managing the stocks, because you have no control over what stocks or what they do, what stocks stay in or come out of that mutual fund. Okay. Whereas if you're, and then you're in that scenario, you're passive, right? So, and that could be a large percentage of your overall portfolios in mutual funds. That's kind of the way that my wife and I do it, is that a large percentage of our money is in mutual funds. Obviously, we have a 401k first, right? And then there's in the 401ks in mutual funds, and then we have other accounts where we have mutual funds, and then we have we have another brokerage account where we have ETFs, we have index funds, we buy into growth index funds. Those are specifically types of different index funds and ETFs, things like that. My point to you is that I think your overall investment strategy needs to be a marriage and a mixture of both. Okay, ETFs. Especially ETFs that track to an index, things like that, are one of the best ways that you, if you're a brand new investor trying to figure out what do I get involved with, and how do I, what type, do I buy ETFs, do I buy index funds, do I buy mutual funds, do I buy individual stocks, do I buy growth stocks, or whatever, and you're like, your head is swimming. I would tell you that one of the single best ways just to get started is look at buying an ETF fund that tracks to an index. That's an index fund. Okay, that's basically what it is. But it's also an ETF. That can be confusing, and that can get you started. And you can do that for a while, because traditionally a lot of these ETFs, they do really, really, really well. Okay, and by the way, you don't have to you can get some of your money going into index ETFs funds, because again, it's tracking to a major index like the S&P 500. But then there are other ETFs that you can go buy. Like there's ETFs again that are like made up of international companies. There's ETFs that are made up of United States large cap companies. There's ETFs that are made up of small cap companies. There's ETFs that are made up of particular industries, tech, semiconductor, pharmaceutical, things like that. You name it, there's an ETF out there. And when you're looking at it, look at it and go, hey, what are the returns? Do your due diligence. What are the average returns for that ETF over a period of 3 year, 1 year, 3 year, 5, 10? Look at what that ETF is, what the returns have been. And then you can kind of make a go or no go decision, and you're like, man, that's a really good track record. It's like it's really pretty good, pretty well, created fund and managed fund. Get started. And then lastly, just to bring this back to mutual funds, you definitely should have some money in mutual funds, because they're not worse or better, they're just different than ETFs. Think of it this way. Your takeaway is that mutual funds are really, at the end of the day, actively managed by somebody else, a professional, or team or group or company like Vanguard, Fidelity, things like that. And so thus you're benefiting from their expertise, and you let them actively manage the fund. Your money produces good returns, but it's passive for you. Okay. Then if you want to be an active investor in other areas, so you actively invest and actively buy some stocks, Tesla's, Amazon, whatever, right? NEO, other stocks, and you can actively invest in some stocks and kind of get that out, do that. You can also maybe be an active / passive investor in ETFs, and now you've got a good blend of all these different types of investments. Okay, so I hope that you've enjoyed this video and gotten value out of it, because that's really what I care about, is bringing you a video that frankly helps you understand these waters. Again, my name's Austin, and if you would do me a favor, please like this video, subscribe to the channel if you got value out of this. Hope to see you in my future videos. By the way, down in the description below, there's other videos that you want to link to. Check out some other ones, and I hope to see you soon. Take care.